Hi folks, this is Donovan Davis with the Reed Davis Investment Group, coming to you with our first monthly economic update. Several of our colleagues around the country have had great feedback from delivering this information through video. So through our continuous efforts to reach out and inform and educate our clients, we thought we'd give it a try. So in this economic update, we will cover some of the factors that drove the markets in January. We'll also look ahead to what we might expect in the days and weeks ahead. By the way, at the end of this video, please stay tuned for some of the required disclosure statements. Markets ended the first month in 2014 on a down note, driven lower largely by worries about currency crisis in the emerging markets. That's affecting countries like Turkey and South Africa and Brazil. While these issues really haven't affected the U.S. economy, they are being felt in the volatility that we're experiencing in the U.S. stock market. For the month, the S&P fell a little over 3.5%, the Dow was down 5.3%, and the Nasdaq fell 1.7%. While it's never fun to watch a sell-off, we're happy to report that U.S. indicators show that the economy is still growing modestly. Investors got their first look at last quarter's GDP, which clocked in at a solid 3.2%, giving us high hopes for 2014. Earnings season also began in January, and with nearly half of the S&P companies reporting in, earnings growth stood at over 7%, the best we've seen since the fourth quarter of 2012, and revenue growth was over 3.5%. While the December jobs report showed a troubling decline in job creation, January's weekly unemployment claims showed a prettier picture. This could indicate that the December report was tainted by some seasonal factors. Though we don't have the monthly data for January yet, economists are predicting a significant bounce back, putting the labor markets back on a positive trend. The FOMC, or the Federal Reserve, met in the last week in January and voted to continue its program of tapering, slowing its monthly bond purchases by $10 billion to $65 billion. Investors see this as a move and a sign of confidence in the economy's recovery, though we feel it's still got a ways to go before it's fully recovered. Overseas, the Fed's tapering of its quantitative easing policies, compounded by local political and financial instability, is helping to drive currency sell-offs in emerging markets as investors flee local currencies and buy U.S. dollars. Over the last few years, investors have poured money into developing economies in search of potentially higher returns. Now that the Fed is cutting back on its easy money policies, weak fundamentals in many emerging market countries are being exposed, and investors are moving capital out, driving down currencies and threatening growth abroad. While these problems haven't affected the U.S. economy yet, a prolonged emerging market currency crisis won't be good news for the global economy, and some U.S. companies may see their growth prospects fall because of declining demand abroad. It's too soon to know how this whole situation will play out, but we're watching it carefully and actively developing strategies to mitigate these risks for our clients. Looking ahead, investors will probably see some more choppy days as we watch to see how the emerging markets crisis affects the market and wait for some domestic economic indicators. Once again, this is Donovan Davis with the Reed Davis Investment Group, signing off for the month of January 2014. We hope that you found this information informative and educational. And if you have any questions about what you've heard on this video, or if you'd like to discuss your personal financial situation, please don't hesitate to give us a call. We'd love to chat. 318-473-0116. While we believe this information in this report is reliable, we can't guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended for investment advice or solicitation for any purchase or sale of any security. Consult your financial consultant before making any investment decisions. We thank you for joining us, and we hope you have a great day.